Hey TMFG community, Carlo Cansino here with John Iaconetti. And in today's Ask TMFG episode, John will be discussing how markets and the economy don't necessarily move in the same direction at the same time. So if you do like our content, please do subscribe to our YouTube channel, provide us with a comment, or give us a like. In today's episode, John will be looking at the relationship between the economy and the stock market. Does it go up at the same time? Does it go down at the same time? John's going to walk through why we don't make changes or try to speculate on the market given what's happening in the media and what we think is going to happen in the economy. John?
Perfect. Thank you, Carlo. So, just like you mentioned, a common question I think we could both say we've been getting in our meetings has been, does the impending recession impact my portfolio? And really, I guess the underlying question that they've been trying to ask there is, if they do announce a recession, is my portfolio going to drop even more? Well, the economy and your portfolio are going to be correlated in some ways. The stock market is much more agile and actually tends to move much quicker than the actual economy would. First, I think it's important to understand how a recession is determined. And a recession is considered 2 quarters of negative GDP growth. So 2 quarters being 6 months out of the year, there's already a 6-month lag between the news that the stock markets will, or how the stock markets react versus when the news will come of a potential recession. So therefore, in early 2022, markets dropped pretty drastically before interest rates were even hiked to the degree that they were promised they would be, and even well before that those interest rates even took effect in the economy. And we've seen this before in our history as well. If you take a look at the screen, we're pulling up here a chart illustrating what happened during the 2008 global financial crisis. And what we're looking at here is how the US recession and stock performance during that time were correlated. So as you see here, the stock market fell well before the official announcement of a recession even occurred, and stock prices recovered well before that end of the recession was even announced. Some investors may worry about the stock market sinking after the recession is officially announced, but history shows that markets incorporate the expectations ahead of the economic reports, which is exactly why that markets fall well before the recession's even started, and markets recover well before the recession's even over. The market is constantly processing with new information that it receives on a regular basis. Therefore, the investors that don't react to the news headlines that come up, whether it be a recession being announced or a recession potentially ending, the market already knows that. The market already expects these things happening based on the news that happens prior to that. So not trying to react to these negative headlines or expect your portfolio to react to these headlines, and just stay focused with the plan that had been aligned for you, and stay consistent with your investment profile. That's how you're going to get through these difficult periods. We've done it before. We've been through recessionary periods before. We'll continue to get through them today.
Thanks, John. And I'm sure the viewers out there appreciate you walking through a previous recession and a previous economic issue and how that relates to the market. And we're going to sound like broken records here, but that it's the same, regardless of whether it's an impending recession or there's a war that's continuing to go on, and or if there's a hangover from COVID-19 and the supply chain issues that we're seeing. All of those things are being priced into the market, and what you're seeing in the market, you should just assume that that's the appropriate pricing for each of the companies that you own in the portfolio.
Absolutely.
At any rate, that's our episode for today. Please do subscribe to our YouTube channel if you like our content. Provide us with a comment. Let us know how we're doing. We want to make these videos better for you. We love doing them for you. Or if you're a little bit shy, just give us a like. Until next time, I'm Carlo Cansino.
I'm John Iaconetti.
And this has been Ask TMFG.